Today I want to talk about how Aron seemingly just confirmed an AMC acquisition or an AMC buyout by another firm. I also want to talk about why the shorts are specifically suppressing the price of APE and how it's their last chance of destroying the squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Guardian tweeted saying, "Don't think Aron is a genius." In his interview this morning with Andrew Sorkin, video attached, Aron was asked, "What does the long term look like for AMC?" Aron then grabbed the knot in his tie and said, "I don't have questions about the performance of AMC over the long term." Now pay specific attention to Aron grabbing the knot in his tie. Guardian said that Aron is telling you he doesn't have questions or concerns about the future of AMC because he's tied the knot. In other words, there's an acquisition or a partnership, aka a marriage. John asked the question, was it specifically a Disney Mickey Mouse tie that Aron was wearing? And Guardian confirmed. Aron of all ties was wearing a Disney Mickey Mouse tie. So it seems like Aron has potentially closed the deal of a partnership or an acquisition of AMC by Disney. If Disney does indeed acquire AMC, they buy up all shares of AMC currently in circulation to take the company private. Now that means that all shares that are currently on loan and all shares that are currently shorted must be recalled to the rightful owner for Disney to buy up every single share. And obviously if all shorted shares and all shares on loan are recalled, it will cause the squeeze as all shorts have to close out of their positions to return those shares. Disney will be buying up every single AMC share, including the shorting ones, including the ones on loan, and obviously to do that, all those synthetic shares must be cancelled. And this is why the shorts are specifically suppressing the price of APE so that AMC can't raise more money and escape bankruptcy for good. If these shorts continue shorting AMC and APE, they won't be able to raise any more money and could potentially slip into bankruptcy. That's the shorts' hopes at least. Because Avi asked the question, why wouldn't APE run? If APE runs, it means that AMC raises cash, and that means that AMC Theatres, the company, can pay down its $3.5 billion of debt. Suppressing the price of APE is a strategy by the shorts to force AMC into bankruptcy in 2026. If they can't redeem and repay all of that debt, AMC could potentially end up going bankrupt. But obviously if the price of APE runs, Aron can issue those APE shares and pay down all AMC's debt in one foul swoop. As Spence confirmed, he said, yep, if they let APE run, AMC Theatres will be debt-free. At the same time, now the shorts have dug their own grave. And he said AMC's revenue will explode in Q4, and with the credit card dropping soon, there'll be even more revenue in Q1. He said, I venture to say they'll be generating $1.5 billion of annual revenue on credit cards and $300 million in annual revenue for the retail popcorn. We also know the price of APE will run. As Robot tweeted, he said the spread between APE and AMC doesn't make any sense economically speaking. Both APE and AMC represent the same piece of the same company, and APE even has those voting rights. Even hedge funds have agreed the price of APE being lower than AMC makes no sense, and they even recognise the arbitrage opportunity for APE and have been going long on the APE stock. They know that APE is exactly the same as AMC shares, and therefore APE should be the same price as AMC. That's even been admitted by these hedge funds themselves. But obviously these shorts can't let APE run, because if APE goes to $10 per share plus, AMC would be debt-free in one singular issue. This is why even though the hedge funds know that APE being a lower price doesn't make sense, these shorts can't let APE run up because AMC would be debt-free and the short thesis would be ruined. AMC ever becomes debt-free, there is zero chance of AMC ever entering bankruptcy. And that's why the shorts are specifically trying to suppress the price of APE so they can't issue shares and clear off that debt. And there still remains a small sliver of hope for these shorts of AMC going bankrupt. The moomoo platform is very easy to use. It has tons of technical indicators and advanced charting tools. You can even create your own 1348 indicators for free on moomoo, or even use other indicators like the money flow index. You also get access to full extended hours trading and even a stock screener that could help you generate even more money that could be invested into AMC. Also guys, moomoo is currently celebrating their 10th anniversary, and right now you can get $10 absolutely free and 15 free shares on top of that worth up to $2,000 each. This is obviously great if you're just starting your investment journey or if you're a veteran investor and you just need some new tools. But we also know that Aron has a specific plan for issuing these APE shares to generate as much money as he possibly can. Aron said when we launched APE, we said we were going to raise capital with it, but do it at a slow and steady pace judicially. He said these are precious things and we don't want to waste it and spook the markets by trading too many shares too fast. He said we do know what we're doing. Therefore, Aron clearly has a plan to raise as much cash as he possibly can with these APE shares. He's not going to dump all of the shares onto the market and spook the market. He's going to do it slowly and steadily, generating and maximising that cash. By issuing those APE shares slowly and steadily, he's also prolonging the suffering of those shorts as well. And that is why the AMC megaphone chart is looking better and better each and every day. If the next AMC run-up is expected to be exponentially larger than the first and second run-ups, AMC is going to run up to at least $200 per share before even causing the squeeze. We know that if AMC squeezes on the next run-up, it will squeeze into the thousands, if not the tens of thousands of dollars per share. But if AMC just has another regular run-up without causing the squeeze, it's going to hit at least $200 per share and could potentially squeeze higher after that if the run-up isn't pushed back down. And as Tier 1 Alpha tweeted, he said, "We're hearing from our friends in the hedge fund community that many funds, especially in multi-strategy firms like Millennium, were shut down and unwound." And he said with many of their most shorted stocks up 15 to 30% in the last few days, it's hard to ignore the obvious fingerprint of forced unwinds. Now this tweet is basically saying there has already been a number of hedge funds in the community, especially multi-strategy funds, that have been shut down and liquidated over the last few weeks. Now we know that so far these hedge funds either haven't been holding AMC short positions or have passed those AMC short positions along to other firms because we haven't yet seen AMC running up. We have seen a number of heavily shorted names like Coinbase and Carvana and a number of tech companies that don't generate profits running up 30 or 40% over the last couple of weeks. But obviously, even though these hedge funds have been liquidated, it hasn't yet caused the AMC squeeze because this is only the first small wave of those liquidations. And these hedge funds have either been not holding AMC shorts or have already passed their shorts along. As we start seeing that second and third wave of liquidations, especially when we start seeing the large hedge funds being liquidated that are holding AMC shorts, we will see AMC running up significantly, causing the squeeze. This is exactly how I expected the market crash to be playing out, and we are now starting to see that first small wave of hedge funds beginning to be liquidated. But obviously the squeeze doesn't happen until we see that second and third wave, especially the wave of the large hedge funds being liquidated, and especially when Citadel ends up being liquidated. But it is comforting to know we are heading in the right directions. There are some hedge funds that are being liquidated right now, and some of their shorted names like Coinbase and Carvana and others have been running. I also wanted to not necessarily dispel some FUD, but explain exactly what's going on with these wrapped AMC tokens. As Tony Denaro tweeted, he said, "I know this is old and they haven't been traded in 438 days. They may be dead for all I know, but can somebody explain how you mint 8 quadrillion AMC wrapped tokens in the first place? He's guessing there's no underlying assets needed." As you can see here from Etherscan, there's AMC wrapped tokens and there's a circulating supply of 8 quadrillion AMC tokens. Now obviously if you were to divide these 8 quadrillion tokens by 5 million AMC shareholders, that means that each AMC shareholder would have had to buy 1,600 million AMC shares. Now I personally don't have enough cash laying around to buy 1.6 billion AMC shares, even at $1 per share, even at 10 cents per share, or even at 1 cent per share. And therefore it is clear that underlying AMC shares were not required to create these wrapped AMC tokens. These tokens were simply created on the Ethereum blockchain with no underlying AMC shares. As Mike tweeted, he said this is likely, but it differs from those tokens created on FTX and Bittrex, which were tied to the underlying security, which they apparently didn't have. While the FTX and Bittrex 1 billion AMC tokens were tied to the underlying AMC stock, and those shares did have to be held by CM Equity, which has now gone bankrupt, these 8 quadrillion AMC wrapped tokens don't have any underlying AMC shares. So hopefully that clears up the confusion around these wrapped AMC tokens and whether there really is a quadrillion AMC shares or not. And finally, I also wanted to talk about this tweet from David versus Goliath. You may have seen this tweet from Citadel Research, and David tweeted saying, "Now, will people see the parallels and intertwining of the parasites against both crypto and the securities markets? Retail is retail, and these entities are taking advantage of us." Citadel Research tweeted saying the US government should be embarrassed they let one person get so close to the inner sanctum of government and influence without even checking a tax return. They said forget about private equity there, caveat emptor. What about the FBI not running a 2-hour cursory check on the second largest donor to the Democratic Party? They said this is a matter of national security. If you didn't try and silence us, we could have told you in less than 2 hours. Now, these tweets from Citadel Research are talking about Sam Bankman-Fried from FTX, but could very easily apply the exact same way to Ken Griffin as well. Sam Bankman-Fried was obviously allowed to penetrate the US government and all levels of the inner sanctum of the government and influence without even doing any background research on his person. But the exact same thing goes for Ken Griffin. Everybody at the Fed and everybody at the SEC doesn't see any problems with Ken Griffin because they're not looking hard enough. They believe that Ken has been trusted for a long time and therefore clearly can't be doing anything wrong. But they don't want to take the time to do a background search of exactly what he's getting up to because, well, I don't know if they're just lazy or they just don't try hard enough. There are so many people like Ken Griffin at these inner levels that just get ignored and looked over, thinking they can't possibly be doing anything wrong just because they've been at these inner levels for such a long time. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers!